Hey, welcome everyone. Tom from Park Avenue Trading. Welcome to another installment of lessons and stories and mindset principles from a chief trader. Now, please, if you like what you see, like, subscribe, and don't forget to ring the bell to make sure that you get that all important content that I put out to take your trading account from $15 to 17 million in 1 week. Just kidding. So anyway, I got Ted on the line here, and we're here to discuss the topic of his choice. So I leave it to you, Ted.
Yeah, so you mentioned systems a lot, like a trading system. And it's one of those things where I think at sort of a vague level, I understand what you mean, but when I start thinking about it, I don't really know exactly what you mean by a system. And I was hoping you kind of walk through like what is a system? How does it work? What's it do?
All right, that's an excellent question. And the fastest way that I can define a system for anybody is it puts basically parameters around a market. And when you have a certain set of rules that dictate to you basically where your entry is and where your exit is, if you're wrong, then you prevent yourself from going through what's known as cognitive dissonance. And that's just a fancy term for saying having two conflicting thoughts in your mind at once. And that afflicts a lot of traders. So some traders want to be long and short at the same time. But what a system does is it defines exactly what you're looking for in a marketplace to make a trade. So your system basically eliminates all, objective ideas in your mind and constantly making silly trades based off of emotion. So, you need to have, you know, this framework in place for yourself as a trader in order to succeed. Okay. So wait a second. I think I got that backwards. Was it objective or subjective? Subjective is, it should be subjective, right? You want to get rid of all the subjectivity and you want to have objectivity. Well, there you go. College graduate myself. All right. So um, let's break that down a little bit more. Let me share a screen with you and we could talk about that. This is over, say 25 years of actually helping traders develop a trading system that suits their personality. The first thing that you need to do for any successful trading model is basically identify a system that suits your personality. Nobody's going to be able to trade like me. I can't trade like anybody else. I need to develop something for myself. On a sub note, it's like I have many traders that trade systems and have ideas. I don't talk to them about trading because I don't want to be swayed about what they think. I want to always, objectively view what I have and use my system as a means of entering exit the marketplace. I don't want to be swayed by, my buddy's system that, he's been right 10 days in a row and I've been getting punched in the nose, every other day. I don't want to be swayed by that, so I don't talk to anybody. So one of my first rules to my traders is just follow your rules. Don't listen to anybody else. As a matter of fact, turn off the news and definitely, make sure that you stick to what you designed for yourself. Win, lose, or draw. It's better than just constantly flipping back and forth. So the first question I would have for you is if we're going to be developing a trading system for you is who are you interested in? What traders would you like to emulate?
That's a good question. I mean, I just started poking around, and so I mean, GAN comes up, but that's really confusing. I don't really understand any of it. And then was it Wyckoff seems to be more like what you teach, more technical, more like looking at the price, more price action.
Yeah. GAN, you don't go down. I went down the rabbit hole for GAN for years, trying to figure out, the magic of GAN, and GAN had some really good ideas. But I don't believe that, astro cycles have anything to do with price. And he was into, astrology and astro cycles. So, I mean, you could go down that rabbit hole if you want, but I don't think there's any magic to it. I think it's really just more confusing, creating more cognitive dissonance. Um, but Wyckoff was definitely more of a price action trading guy. So I side with Wyckoff more than Gann, and So what we could do is we can combine ideas of Gann and Wyckoff, and we'll work on that, and we could actually post the video on what we came up with. So you see that like building a trading system is not, there's nothing mystical about it. You find what you like, and you find ways to define what you're doing, and you basically follow those rules, and that's it. Now, the system has to have a mechanical entry. It definitely needs a stop loss against a certain R value. Okay, so uh, R value and that's, we could discuss that in other videos. Hopefully the people viewing it understand what it is. Basically, it's just your risk value. And it should contain a position sizing element with defined rules for pyramiding. Pyramiding for winning trades only, you adding to winners. So like one of my systems basically tells me if I'm making money after a certain amount, I'll do 60% of my core position at a certain level, and then it's 30% on the next ad, and then it's like 15% on the next ad. So I'm pyramiding with smaller amounts every time, and that's another thing we could talk about some other time. But you have to have rules for pyramiding, because when you pyramid winners, when you're stepping on the gas, that's when you're going to make the most money, and you need to do that in order to basically make up for all the little cuts that you're going to receive in trading. Now, if you think about it, most people without anything could be about 50-50. They win 50% of the time, they lose 50% of the time. If on your wins you had just an ability to pyramid the winners, you'd come out ahead. And it's a really simple thing. I mean, if you think about it, you could actually toss a coin and play a coin toss game. And we'll talk about that in the second section, where it gets difficult for 90% of the people. And we'll talk about probabilities. But so you need to have also a positive expectancy in your trading system. It needs to make money. It needs to have an edge. If it doesn't have an edge, you're basically just sitting in the mud. So, you got to have a positive expectancy. Now, I profess 3 trading systems, and I basically teach 2 of those primarily in our trading room. We talk about Forex Confidant, basically simple trend line breaks, and we look for certain things to happen to see if a marketplace is, if the downward movement's cooling off. We talk about price intersection. If the marketplace is, we have many different things that we talk about as far as just with Forex Confidant. And then we got tower price, which is a totally separate issue itself. It's basically looking at market measurements to look for buy envelopes, sell envelopes. And then there's the proprietary system that I basically call trades off of, which I call Genesis. And I give those trades out in the trading room. As you know, I say buy here, sell there, stop loss here, stop loss there. So that's for another, video. We don't want to make this a video sales letter for my stuff. I'm not interested in that. But anyway, the trading system in part 3, number 3, it's got to be simple, straightforward, and easy to follow. So the system itself, you should be looking to design a system that you could basically hand off to your girlfriend, boyfriend, significant other, whoever, whatever's going on, and say, look, I'm going on an African safari, and there's going to be no internet where I'm going. I'm going to be gone for 2 weeks, but if you follow these rules, I'll still be trading. If you follow these rules exactly to the dotting your I's and crossing the T's, I'll still be trading. So that's how simple it should be. You should be able to pass it on to somebody else, and they should be able to do what you do. They might not like what you do. They might feel, oh man, this thing stinks, but you don't care about them. You just want them to follow the rules. Now, an example that you could look at is Richard Dennis's Turtle Group. It's not a rock band. Okay. It was a group of people, traders, that Richard Dennis put together and basically taught his system to. And it's a very simple system. It's based off of a 20-day breakout. So the market went one tick higher than the previous 20 days that they would buy it, and they put a certain stop loss on it. Now, they had some rules that, if the last 20 bar breakout worked either up or down, they wouldn't take the trade. So they had some nullifying rules, and they had some rules to actually take the trade. And they were wrong about 70% of the time. Okay, so because a lot of times breakouts don't really turn into major trend reversals. However, when they were right, they were wildly successful, and they recouped all their losses and made a lot of money trading that system. So from that, I'm going to segue into why this gets really difficult for most people. This is a really important point that I'm trying to hammer home to people if they develop their own trading system. You develop your own trading system, and let's say, for instance, you come up with a system that's 50% correct. Now, a lot of people are going to go, oh my God, that stinks. I want to be 99.99% like the guru on YouTube in front of the Ferrari with the fancy watch on, he never loses. Well, nobody's immune to statistics. And I would have to say that the guru that you're looking at is full of baloney, because statistically, 95% of people wash out after like 2 months in this business. And that's a whole hard, cold fact. I don't like to say it, but it is true. And I think that one of the main reasons it's true is because people don't understand probabilities. And they let their monkey mind take over when things aren't working right. So let's say, for instance, you do develop this system that's 50% correct. And this system is it wins twice as much as it loses when it hits. So now you really have a positive expectancy system because you're winning twice as much as you lose. So, but now we have to talk about the probabilities. And this is where the coin toss comes in. You could actually do this on your own. You could toss a coin 100 times. And let's say, for instance, your system, pick one. Your system bets only on tails. But when tails hits, you win twice as much as you lose. Or your system only bets on heads. So when heads come up, you win twice as much that you risk than you would lose if a tails comes up, okay? You could do this 100 coin toss, and you'll see it play out right in front of your face. It's a really cool little thing to do if you got an extra 30 minutes of your time flipping a coin. But I mean, it's a good way to prove this to yourself. So here's the thing. We can all agree that out of 2 trades, the probability of getting one loser is 1. Out of 2, you're going to get 1 loser. That's just a probability. If we go up to 4 trades, what's the probability of getting 2 losses in a row? Well, the probability is basically going to be, 1/2. So you can get 2 losers in a row. Again, this is losses in a row, okay? So doesn't mean these are the probabilities of it happening. Out of 8 trades, you're going to get 3 losers in a row. Out of 16 trades, you're going to get 4 losers in a row. Out of 32 trades, you'll get 5 losers in a row. These are mathematical facts. But how many people can continue trading the system that they developed with 5 losses staring them in the face in a row? Are they going to start to doubt themselves? They're going to start to doubt the system? Are they going to change rules? Are they going to not enter trades because, oh man, I got 5 in a row? Let me just don't do it anymore. Let me just wait till it starts to win again. This is the death of traders because they don't understand the probability. They don't go deep enough into their system itself, and they can't sustain the losses in a row. Now, I was talking to you before we started doing this video. I told you that I have a buddy of mine that loses 70% of the time, and he's wildly successful. And basically, he trades a system. I'll keep the system to myself, but he trades something that was really put out by one of the technical gods of the marketplace. The guy's an incredible. He wrote some incredible books. But anyway, so he says to me, "Well, I trade this system, and it has to work immediately. If it doesn't work immediately, I'm out." So I said, "What do you mean immediately? If it goes 3 ticks against me, I close the trade." Wow. Okay. But when the trade wins, I make, 25, 30 times what my risk is. So I only stick with the winners. Now, I personally could not trade that because I couldn't stand getting punched in the face like every day, even at 3 ticks. It's just kind of annoying to me. So it does not suit my personality. So I can't do it. No matter how wildly successful he is, I could never follow it. So that goes back to the first part of the successful trading model. Decide on a system that suits your personality. Now, if we go one step further, if we say we got a 66% system, so one third is wrong. So, out of 3 trades, we're going to get 1 loser. Out of 9 trades, we're going to get 2 losers in a row. Out of 27 trades, we'll get 3 losers in a row. At 81 trades, we'll get 4 losers in a row. So as you can see, the higher probability, the higher win ratio, this is where win ratio is important in trading. But it's not the only important factor, because it matters how much you win when you win as opposed to how much you lose when you lose. Because if you don't win much, even at 80% or 99.9 like that guru, then you haven't really won anything. If you have 99% of trades that you can make 1 tick on it, 2 ticks, you haven't won anything after you take out brokerage and everything else. You didn't win anything. So win ratio is important. However, the amount that you win compared to what you're risking is more important than that. So that's what you have to keep in your mind. Like, I got a 66% win ratio. I can make 1.6 R against what my risk is. So I have a positive expectancy, and now I'm going to let this system play out. I'm going to just keep using my system. I don't care that it lost 4 in a row out of 81 trades. I don't care, because I know that it's going to kick in again, and I'm going to make money again, over the long term. So what I'm trying to stress here is, if you have a positive expectancy system, don't just bail on the system looking for the next shiny object after 3 losses in a row. Don't give up on it. Don't start changing the rules. Once you start changing the rules to suit what happened in the past, you're gonna lose. Eventually, it will happen. So did that make sense to you? Or was I too scattered?
It's in fact, I think you talked about exactly what happened last week when you tried to jump in. Was it the sterling yen one, and it blew up, and you're like, well, whatever, and you went right on to the next one, and I think made 2R on it. So I think that's exactly what happened last week. So yeah, no, that makes sense. So define your rules, and then stick to those rules, so that you don't start being like the squirrel across the road that gets hit because he can't figure out which direction to go in.
Exactly. So the system's going to define that for you. The rules of your system are going to define it. The money management's going to define it. And it's not that complicated. As you can see, when we work on your system, as far as Gann and Wyckoff are concerned, people will see, like, oh my gosh, like, what do you do? Just make that up? And the answer will be yes.
Okay.
I did. And what we're really defining on it is the losses, the R value, so that we can have judge, what we're making. Now, I said before that I just lost my train of thought. Well, anyway, I never really like to put targets on things. I just move my stop losses up or down according to the trade. Because if you just put targets on things, and that's for another video, you could, say you got 30 pip gain, and you were looking for an R value of 30, and that's a 1-to-1. Well, you know what? Why be concerned about the money that you never had before? Just move your stop up so that you'll protect your capital. But what if it goes to 60, 90, 120 pips in your favor? At least you got the trade on, constantly keep moving up or down, so that's an important aspect. So you have any other question?
No, it sounds like, yeah, we can let's work next time. We'll work on how to build a system. Be a great lesson for next time.
All right, excellent. Thank you very much for the question. And please, if you like what you see, like, subscribe. Don't forget to ring the bell. If you really want to learn some really cool techniques, scientific ways to look at breakouts, go to parkavenuetrading.com. Pick yourself up a free ebook. I think that you'll really enjoy it. So until next time, look forward to seeing you again. Cheers.